I just wanted to do a highlight reel for those people who couldn't tune into my question and answer session. The one question that I answered that I think deserves to be repeated to the group is the question I got about student debt and what would I do if I was king of the financial world. Student debt actually makes me relatively nervous for reasons different than what I've heard expressed by other people. It turns out that in 1980 there were about 520 million people in the global workforce. This is before the fall of communism, obviously, and before China and India got integrated in the world economy. And in 2012, we've gone from 520 million people in the global workforce to about 2.5 billion. The pool of labor available to us has expanded rapidly, and that's not just unskilled labor, but it's people in all levels of skill. I'm in Thailand, for example, at the moment, and it turns out that there are people who come to Thailand on dental vacations, right? So there are dentists here who are just as good as the dentists back in my native Toronto, but they do it for much less money. And so it actually makes sense for people to fly to Thailand, get their dental work done, and go on home. And now, why is that relevant to people who are taking on student debt? If people go to university or college for vocational reasons and they're starting to compete in a global marketplace, that's actually what makes me most nervous about Canadian student debt. What would I do if I was king of the world? King of the financial world. And I'm a fan of incremental changes. I'm a fan of conservative, slow-moving change. But I think there's some things that we could do in Canada that would make investors' lives a little bit better. The first of those, of course, would be to make our paperwork from the investing profession to clients a little bit more easy to read or a little bit less opaque. People don't know what book value is, for example. There's no harm, in my opinion, with just saying to someone, here's what you paid for this asset, here's what it's worth right now. Here's how much income you've generated on it, at what rate of tax. That's a pretty simple, straightforward thing to do. People don't understand some of the stuff we've thrown into the statements. And I'd also make commissions a little bit more transparent in Canadian financial services. Bond commissions in particular, if Canadians knew how much they pay in bond commissions, I think there'd be a bit of a riot. So that's something I think we should do. And looking at a more macro level, if I was king of the financial world in Canada, I would impose what is called the natural rate of interest. And the natural rate of interest, if you're interested in this, you can look up a guy named Knut Wicksell, who was an old Swedish economist who was active at the beginning of the 20th century. The natural rate of interest is neither expansionary nor contractionary. It basically represents the long-run expected growth rate in the economy and the long-run inflation rate. By keeping the natural rate of interest and only the natural rate of interest, not trying to tinker with things, would get away from the problem central bankers have had in the last 30 years. Tinkering with things, they tend to inflate these asset bubbles. So we've had 11 so-called great financial bubbles in world history from 1637 when the tulip bubble collapsed to today. And 7 of those 11 have happened in my lifetime. An argument could be made that those bubbles have been abetted by central bankers offering financing when times get rough for people. And so I would just do away with all that if I were king of the world and just impose a natural rate of interest. Neither hurts nor harms savers and hurts nor harms borrowers. It is what it is. Those would be my big, reforms, if you want to call it that. So that's basically the highlight reel from the question and answer session that we had a few technical difficulties with the other day. I hope you found it interesting. If you have any questions or comments, I welcome them. Thank you.